What's up? We are back with another stock analysis. Today we will be looking at Lockheed Martin. Now, I honestly don't do defense companies too often, just because I'm not the biggest fan of the industry. But based on what I'm seeing out of Lockheed Martin, I think they could be a really interesting company to look into at the moment. Their stock price is at a fairly decent level. They do definitely have some debt issues. However, from what I understand, based on things I've seen, they have like specific partnerships with a lot of different funding sources that they have a fairly safe debt position either way, despite having a ton of total debt. But either way, we are going to get into them today, look at their financials. I hope everybody is liking the new setup. Very lazy. I do have a real microphone now instead of just my laptop, and I put some smart people books behind me to show that I could be a little bit credible sometimes. But either way, let's get into it and see how Lockheed Martin's been doing recently. Oh, also make sure to subscribe. So Lockheed Martin goes into military products primarily. It says security and aerospace, but realistically they make missiles and things like that. So moving on, market cap is at 112 billion. I think that's kind of shocking, and I'll get into why that is later. But target price at 536, 14% long-term growth rate. Right now we're at 468, so fairly significantly below that target. So far, growth estimates look pretty rough, actually. Long term, they look okay, but everything else short term looks pretty not great. Which is kind of expected. It seems like there's kind of been a de-escalation of war in the past few months, and that's kind of being shown in the estimates. And honestly, that's a good thing. Not really a big fan of defense companies in general. But anyways, moving on to the earnings, let's see how they've been doing recently. So we should have a lot of information here. Pretty big company. So starting off with the metrics recap, and then we'll get into the analysts. Revenue, Aeronautics beat, missiles beat, Rotary and Missions missed slightly, and then space also missed by about 200 million. Operating margins came in well below estimates, which is not great. Either way, unclear if operating income is comparable to consensus. I don't really know what to say for that, but came in well below estimates. Backlog is at 176 billion though, which I believe is just the total value of their contracts, and that is insane. That's a crazy number. So let's take a look at what analysts are saying now. And then we'll get into their actual chart. But so shares were down 9% off of this. Revenue missed slightly. Top line was mixed. Aeronautics and missiles beat, and rotary and space lagged. Operating margin was very low, very low. Other than that, it's basically everything we just read through. Analyst reaction was more optimistic than the shares reaction was, so the actual share price. Acceleration of classified program was something of a surprise, although missile fire control aligned with the previous guidance. Aeronautics viewed as a surprise. Outlook that is now de-risked was noted. General concern in space. I honestly think the entire space sector is still a couple years off. We did just go into Rocket Lab on the channel a couple days ago. Make sure to check that out. But I think the entire space sector is not looking great for probably at least I can't even say 4 or 5 years minimum, I would say, before any kind of significant changes are made there. But overall, I just don't think the technology is there yet. And I think this company will also kind of, at least in that segment, they will suffer because of that. So analysts lowered slightly, target at 579, and also lowered slightly. So overall target prices decreased. They are still well above where the current price is, but I believe if we look into the chart here, when this report came out, they were significantly higher at about 500, which now they have kind of bounced off of that. I do have a long-term support that I'm kind of seeing here that they have very clearly bounced off of. So that is something to be a little optimistic about. They could continue rising. But now let's get into why I think their valuations are kind of crazy. Um, so it is a defense company, so it does kind of make sense, but having $71 billion in sales is insane when you consider that their market cap is very, very slightly above, well, not slightly, but only a little bit above that at 100 billion. Especially if we just flip back here a couple days ago when they were probably, let me see, 8 or 9% lower than they are now, and their market cap was 100 billion. That 71 in revenue and that 100 in market cap was just too close to where it seemed like a crazy valuation. Um, Net incomes have been fairly steady. They are kind of on the lower end of what they've been seeing in the past 5 or 6 years right now. And that is included with record sales, which isn't great. That's really showing a drop in efficiency and profitability for the company. Basic shares are decreasing significantly every year, though, so that is something to be optimistic about here. But also the record sales, that is massive sales growth year over year, so that is something to also take note of. But overall, we're seeing a huge drop off in profitability over the past few years as well, which we'll see when we get into the ratio analysis in just a moment. So first, the balance sheet. Assets are at 55 billion. Looks like a very significant all-time high in their assets. 2.5 in cash, and this is where there is a little bit of a concern at the moment. Their long-term debt is currently at $20 billion, which is insane. Short-term is at another 1 billion. So 2.5 in cash. They do have a ton of assets, especially intangibles. They have a massive amount of intangible assets. Which is great. But at the same time, their debt, especially compared to their equity, is massive. And again, we will see that when we get into the ratio analysis. But overall, I think the debt situation can be a concern. However, I did just read a report about this stock for the portfolio that I managed through my current internship. And from what I heard from it, they have a partnership set up with a bunch of different funding sources where their enormous debt load is fairly manageable just because of the way they've kind of partnered with a bunch of different firms. So that does kind of lessen some of the risk from it, but either way, it's still $20 billion in debt and most likely to grow even more, which isn't great. So once again, their operating cash flow is also at the lower end of what we've been seeing for the past few years. Actually, it's the lowest they've seen since 2019, which is not great at all. Investing activities, fairly normal, just CapEx. Financing, we see massive repurchases of stock, which is awesome. And they are paying out a ton in dividends as well, which is a great sign. However, we're also seeing enormous issuances of debt. But overall, it looks like they are kind of can't in the numbers game, they're canceling each other out. But either way, a lot of debt, and they're putting a ton of money back into dividends and their own stock. So saying that their free cash flow is again on the lower end of what we've been seeing in the past few years, which isn't great. And now moving into the ratio analysis, we will see how much their efficiency and profitability has really dropped off. So currently they're at 11% with the gross margin, 14% average, and a 3% drop year over year, which is terrible. SG&A did rise slightly, but it's so low right now that it really doesn't matter too much. Operating margin had a 3% drop. Net margin fairly similar there as well. Let's see here. ROA and ROE are both. ROA is the lowest that they have seen since 2017. And ROE is still actually fairly high, especially just considering in general of any company, 81% is crazy. But either way, a lot of important numbers here are much lower than they used to be, and they're at their lowest levels in many, many years. Operating margin is actually the lowest they have for the past decade at the moment, which is crazy. Even considering um, the kind of pandemic years, that's insane to look at. And then one last thing, total debt to equity at 338%. That is insane. Massive increases over the past 2 years. But again, I did read a report that they do have some kind of debt partnership set up that apparently makes it more manageable for them and easier. So although this number is extremely high, apparently there is not as much risk with it. How credible you want that information to be for you is kind of up to your own interpretation. But either way, I would say it's still way too much debt. Especially if you look into their competitors like General Dynamics, Raytheon, their debt to equity ratios are well under 100%. So, or at least I believe they are. Either way, they're much lower than 338. So, not great there. Other than that, I think that's everything I wanted to cover for Lockheed here. So, overall, I would say a fairly decent company. Um, the way that their valuation is set up is kind of crazy, where their market cap is very close to their sales, and they have some of the highest sales of any company ever. Um, so just the fact that their valuation is this low is kind of crazy, but also being in sort of a very heavily regulated industry kind of makes sense. I feel like regulated companies are held back a ton compared to lesser regulated or non-regulated companies, but either way, that's probably what I'm going to say is kind of limiting their market cap growth. But either way, fairly good company. I think short term we're going to be seeing them rising, although there is now talks of ceasefire in Ukraine. I just saw a Wall Street Journal article that said there's a ceasefire being proposed. All of Russia has to do is accept it at this point. So if that happens, their stock is most likely going to go down, which honestly, in my opinion, is perfectly fine with me. I'm not buying this company. If they profit off a war, that's kind of rough. But either way, company's a company. That's all I got for today. Thanks for watching. Make sure to subscribe if you haven't, and I'll see everybody in the next video.